Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Stocks trimming their losses with a rebound in some tech shares. This amidst the eruption of a new partisan battle over replacing Supreme Court Justice Ruth Bader Ginsburg. Justice Ginsburg's death could reshape the court and have dramatic implications for generations to come. President Trump says he's considering as many as 5 women to replace her. Today, Senate Majority Leader Mitch McConnell saying he'll take any nominee to the Senate floor for a vote. We're going to get to all of that in a bit, but first I want to talk about the market moves of the day. Bloomberg's Abigail Doolittle with us now from New York. Abigail, what kind of Monday was it on Wall Street?
A volatile one. Surprise, surprise, Emily. It's amazing. You can't go a day here without massive swings for stocks here in the U.S. But, at the open, sharply lower, and for much of the day, in fact, sharply lower. The NASDAQ at the lows down 2.4%. The S&P 500 close to down 3%. At the end of the day, though, take a look at the NASDAQ 100. What a turnaround. Up 0.4%, led by the mega cap FANG index, up about 0.8%. The tech index for the S&P 500 up by about the same amount. So in the morning, it did feel like there were some dip buyers lurking, not really coming out. At the end of the day, they certainly did. And in spades, in Apple, up 3%. Technically, that stock is doing some interesting things for sure, but you saw that stock leading another mega cap, Microsoft, higher. So overall, it seems as though investors gained some confidence as the day went on. There were some early tells of that possibility. Bonds didn't rally all that much. The yen was flat. So it wasn't really risk off this morning. And as a result, tech did turn around. It's very interesting, Emily. One reason to think that maybe the buying will continue, some of the bigger momentum names on the year, such as Zoom Video, along with DocuSign, AMD, the chip company, all of these stocks started out the day lower. At the end of the day, big gains for those stocks, up, more than 4 to 5%. So investors wanting in on the stocks that are, up huge amounts on the year, hoping that there isn't more selling pressure ahead.
So let's talk about TikTok and how we saw that play out today. Obviously, now you have President Trump suggesting he could renege on his approval of the deal, the Chinese government saying they're not necessarily going to approve the deal, all leading to a great deal of additional uncertainty. What were you watching there?
Uncertainty, more volatility. You know what's so interesting, though, about Oracle, Emily, is the fact that it has been doing exactly the opposite of the broader markets and tech in particular. So the month of September has been very, very bearish, as you know, for technology. Oracle, though, not so much, up about 10% since it was announced that it was going to go after TikTok. And even prior to the announcement last week, there was a sense of optimism around Oracle. Of course, they put up a good quarter, but just the idea that they're trying to get into something new. Of course, Larry Ellison, the founder, a supporter of President Trump. So there might have been some sort of a sense that they could do well in perhaps, getting the nod. But now all of this uncertainty, unclear who the global owner would be, or the owner would be of the global entity. Of course, with President Trump saying that if it's the Chinese company, that it's not going to happen. But with the deadline, I believe, pushed out to Sunday or next Monday, it's a case of kick the can down the road, try to get a deal done that works. In the meantime, Oracle shareholders are really benefiting, and technically that stock is starting to break out, so perhaps more gains ahead.
All right. Well, we're going to dig into what is happening now there a bit more. Bloomberg's Abigail Doolittle, thank you so much. Sticking with TikTok, I want to bring in Bloomberg's Shelley Banjo, who has been pounding the pavement on this deal for the last several weeks and over the weekend. Shelley, big developments over the weekend, a deal that the president approved. Now, all of that has been cast into doubt, with Trump suggesting he could renege on the deal over control issues with China. China suggesting they won't approve the deal, as is either. Where do we stand?
Yeah, so there's definitely still a lot of political posturing left to be on this deal. I mean, it was a big indication that Donald Trump came out over the weekend and said that he gave his blessing. Now, when he did that, he basically repeated a lot of things that were not true, according to the deal negotiations, which was that that this kind of deal would allow TikTok to be majority owned by American investors, and that U.S. investors would control the algorithms and the tech. So according to, deal terms announced by all the companies, that actually wasn't true. ByteDance, the parent company of TikTok, maintains 80% ownership of all of this, with a 20% stake going over to TikTok. And so, then Donald Trump goes on Fox News and kind of says, this isn't going to happen unless there's a majority control by U.S. investors. And so then you saw similar statements come out pretty much rapidly after Donald Trump went on television this morning. And so, I think there's a lot of, kind of political jockeying to continue on. And obviously they have to actually sign an actual deal, on paper for this to all go through. The kind of third option of all of this, as Abigail alluded to, is continuing on with these extension after extension after extension. And then we get to the presidential election, which could change everything.
So walk us through the deal structure as it stands now, with Oracle and Walmart sharing a 20% stake, ByteDance still having majority ownership, but supposedly not control. How does that actually work?
Yeah, so the math on this is a little bit tricky, and it kind of depends how you interpret it. So the way that they are suggesting that it would work is that there would be a new entity called TikTok Global. And what that would be is that ByteDance would have 80% ownership. And what they would do is raise a brand new round of fundraising, a pre-IPO round that would allow Oracle and Walmart up to a 20% stake. So Oracle came out and said they're shooting for a 12.5% stake, with Walmart as the remainder. Other investors like other existing investors like Sequoia, General Atlantic could also participate in this future pre-IPO round. So the contorted math around all of that is because American investors own shares in the parent company, that they would also that would transfer over into the new company. And so, if you do a little bit of the fuzzy math, then it'll become American controlled. But, that's not really how companies are run. If you're a minority stakeholder in the parent company, that doesn't really give you any kind of power or say over the decisions that get made at that company.
Meantime, this is having, potentially cascading implications for other companies that are not TikTok, WeChat, Tencent, gaming companies that work with Tencent in the United States. If we see extension after extension for TikTok, what does that mean for all of the concerns that the president has voiced about everybody else?
Yeah, so WeChat is its own kind of beast here, and that they're not trying to really create a political solution to. What ended up stopping the WeChat ban over the weekend was a preliminary injunction by a judge that said, this actually goes against the free speech and constitutional rights in the United States. And so, with the TikTok deal, you have political leaders and lawmakers trying to come up with a solution. They want to get a deal. With WeChat, you don't see the same thing. You don't see any support in the U.S. by any lawmakers trying to salvage that app inside of the U.S. And so, I think the outlook for WeChat and perhaps more broadly Tencent could be a lot more dire.
So talk to us then about what's next. Obviously, we're waiting on a lot of things, a lot of uncertainty as far as the mechanics of the deal, moving through various approval processes at the White House. Where do we stand?
This is going to be multiple tracks going on at the same time. So Donald Trump needs to find a way to, get what he wants, which is the talking points of being able to say that it's American controlled. But largely the administration has, kind of rallied against this deal, and they're trying to push it to happen. And Trump came out himself saying, I put the blessing on this deal. From our reporting today, he knows what's involved in all of this. And so I think a lot of coming from Trump publicly is a lot of posturing, but I think that at least for now, the administration is behind this. On China, on the other hand, it's a similar case. Originally, China came out, state media came out in China supporting the deal somewhat reluctantly. You also had, foreign ministers say, like we're not really going to talk about this in detail. We just don't think it's fair for the U.S. to go after our companies or something like that. And so, I think that there will be more days of political posturing. There's a lot of more, nitty-gritty details to work out, especially among so many players and so many companies. Walmart, Oracle, TikTok, U.S. administration, Chinese government. So, definitely details. And then the terms of the deal. We don't know how much money is going to be raised and who's gonna pay for what and how it's going to list in an IPO in the next year.
So many unknowns. Meantime, there are reports that Kevin Systrom, the founder of Instagram, is being courted for the TikTok CEO job. Also, interim CEO Vanessa Pappas has been posting videos on TikTok to the TikTok audience. What's the latest on leadership at the company? Are these reports about interest in Kevin Systrom true? And is he actually considering it?
Yeah, so we have reporting that, they did reach out to Kevin. He has ties to the company. He was on Walmart's board for a number of years, and he also was at Facebook at the time when it was leading negotiations around perhaps buying Musical.ly, which is, of course, the precursor to TikTok. So there is a fit there, but, whoever takes this top job is going to face a huge hurdle. You have to not only deal with all of this, political posturing and geopolitical tensions. You're going to have to figure out, how to answer to a lot of different kinds of shareholders with competing interests, and also lead an IPO. It's a huge, tall task. I'm sure one that will be paid handsomely, but also difficult to do. And, with Vanessa Pappas, who's right now the interim CEO, she was already passed over for a CEO job when they hired Kevin Mayer, the former Disney executive who had a very, very brief stint at TikTok. So it will be interesting to see if she's also considered again for this job, now that she really has kind of heralded the company throughout all of this.
All right, Bloomberg's Shelley Banjo continuing her excellent reporting on the twists and turns of TikTok. Shelley, thank you so much for that update. I'm sure we'll have you back here tomorrow. All right, now published reports today indicate that Quibi is exploring strategic options, including a possible sale. The streaming giant, which focuses on short-form content for mobile devices, has struggled to sign up subscribers since launch. Founder Jeffrey Katzenberg says it's because of COVID-19. The Dow Jones reporting the company is raising more money or looking to go public through a merger with a special purpose acquisition company, or a SPAC, as we call them. Coming up, Microsoft looking to boost its Xbox gaming division with a new $7.5 billion acquisition. Details on the deal for ZeniMax Media next. This is Bloomberg. Microsoft is making its biggest video game purchase ever and getting ready to launch a new generation of Xbox consoles in November. It is set to acquire ZeniMax Media, owner of the video game publisher Bethesda Softworks, the maker of popular games like Elder Scrolls, Doom, and Fallout, for $7.5 billion in cash. Microsoft's Vice President of Gaming, Phil Spencer, gave us all the details earlier today.
We view content as just being critical to our platform. We've got Game Pass growing very fast. We're over 15 million subscribers. As you mentioned, we've got consoles. We're going into pre-order for our next generation of consoles tomorrow. We've launched xCloud last week into our Game Pass subscription so people can play our games on their mobile phones. Content is just foundational to what we do. And with this move, we double the number of content creators we have inside of Xbox, which I think is a great move for the Xbox community.
So once inside Xbox, ultimately will Bethesda then start making games for only Xbox and PCs only and not PlayStation?
Clearly, our commitment with this move is that Xbox and PC and people playing on xCloud and Game Pass will get ZeniMax's games. So the collection of Bethesda studios will be coming to Xbox and Xbox Game Pass, and that's just a huge commitment from us. In terms of other platforms, I think we'll make a decision on a case-by-case basis, but this is really a move to just show the strong commitment to the Xbox community that great games will be coming.
Now, as you mentioned, gaming traffic has soared. You've now got 15 million subscribers on Game Pass. That said, some gamers have been disappointed in some of the gaming offerings. How much of this is pull forward demand given the pandemic, and what do the quarters ahead then look like?
We see gaming as a really strong growth category. It has been for many years. 3 billion people play video games on the planet, half the connected world. It's nearly a $200 billion top line business. Both of those numbers growing by double digits. So gaming is just a secular trend in entertainment, people moving from passive entertainment to active entertainment. You see it, kids everywhere playing video games, Minecraft, Fortnite. It's just a really strong place for Microsoft to make an investment with the transformations we're seeing in the business.
As you said, content is king, so I have to ask about the TikTok deal. Of course, it is still playing out, but how big a deal is it that Microsoft lost the TikTok deal?
We were pretty public about how that played out. I don't have anything to say with how TikTok is working now, but when I look at our growth aspirations in the consumer space as Microsoft, I think our investments in gaming and reaching communities everywhere is going to be critical to our long-term success with consumers.
That said, the Trump administration is now pushing U.S. gaming companies on their ties to Tencent, and that means Fortnite and League of Legends, which are hugely popular on Xbox. What is Microsoft's position in this geopolitical tug of war? What if Trump starts cracking down on Fortnite and League of Legends?
We've taken a long-term approach to gaming. We think people should be able to play the games that they want to play with the community they want to play with on the devices that they want to play on, and that's been central to our strategy. We work with global partners to be able to do that, and we hope to continue to do that. It's really a cornerstone of our strength of reaching the over 3 billion gamers on the planet.
Meantime, there's a battle royale going on between Fortnite maker Epic Games and Apple and Google. Xbox has its own situation with Apple's App Store. Do you think Apple and Google are monopolies like Epic says?
We think gamers on general purpose compute devices should have access to services like Game Pass cloud streaming. We think that should be available to everyone, and we're committed to making that happen. We'll continue to work with the large mobile operators out there. We'll work with Apple, we'll work with Google, we'll work with Samsung. We're doing that today. And I think gamers should have choice with the devices that they have on the content that they get to play.
Microsoft's Phil Spencer there, head of Xbox. All right, coming up, Nikola plunges today on news its founder and executive chair is stepping down amid a probe from the SEC. Is the company's future at risk? And the much anticipated Tesla Battery Day is tomorrow, with some analysts calling it a potential game changer. Will this showy event live up to expectations and follow through on Musk's big plans? All that coming up next on Bloomberg Technology. This is Bloomberg. Nikola founder and chair Trevor Milton stepping down today amid allegations of fraud and a report about the company, that the company is being probed by the SEC. The stock took a hit during market hours, bringing shares down almost 20%. With us for more is Bloomberg's Ed Ludlow. Ed, what do we know about why Trevor Milton has resigned?
The rationale behind it, painted by Trevor and the company, is that they want the focus to be on Nikola, right? On all of the lofty ambitions that Nikola has in the world of clean energy, heavy-duty vehicles. And, what's been the case since the short seller report came out about Nikola, since additional reports came out about federal agencies investigating those allegations of deception and lies about its technology, is that all the attention has been on Trevor. He acts in a way that is unusual at best for a fiduciary or an executive of a publicly traded company. In the days immediately following that short seller report, Trevor took to Twitter, he took to Instagram and did live broadcasts giving details about his reaction to that short seller report, what he planned to do. He stated that he was going to give a complete point-by-point rebuttal of the report, but that never really materialized. And as time has gone on, investors and Wall Street analysts have basically said that he needed to be reined in, especially with regards to his social media activity. The company's chief executive officer, Mark Russell, and CFO Kim Brady have been on this charm offensive tour, appearing at virtual conferences, analyst days, trying to explain the company's position. They've obviously answered questions about the allegations raised in the report, and they've played them down and said that right now we're all focusing on our core technologies. And that was very much what was in the statement on Sunday night. It's that now is a time for execution, and Trevor is stepping away from the company to shift the focus away from him and what he has to say back onto what it is that Nikola is trying to do.
Now, GM seems committed to maintaining the big stake that they recently took in Nikola, but what happens now?
Well, Steve Gursky, who was a board member anyway, but as we reported last week, was kind of the key architect of that deal with Nikola, takes over as chairman of the board. And as you said, GM came out today in defense of the deal. They say that they want to close the transaction. And if you read across what Wall Street analysts have to say, it is simply that Nikola must focus on execution. On paper, Nikola has a strong business plan, right? It has reputable, experienced partners in General Motors. In Europe, it plans to build its battery electric truck starting next year, semi-truck with Iveco, an experienced and respected heavy truck brand. And it also partners with Robert Bosch on the technology side. And there are a few companies in the world as big as Robert Bosch when it comes to developing different technologies. So that's what Wall Street's calling for them to execute. The question really is how they do it, because a lot of the progress that they state they will make in regulatory filings, presentation to investors, are contingent on them securing further partnerships with other third parties. And the question really hanging over this is the credibility of Nikola. It's a word lots of analysts use today. Has their credibility been damaged, and how long will it take for their credibility to recover so that they can make progress on all the things that they want to do?
Now, I do want to move on to Tesla Battery Day happening tomorrow. Obviously, huge expectations. Elon Musk just tweeting a few minutes ago, perhaps trying to manage expectations, saying, important note about Tesla Battery Day unveiled tomorrow. This affects long-term production, especially Semi, Cybertruck, and Roadster, but what we announce will not reach serious high-volume production until 2022. Then he goes on into some more detail about how they still see significant shortages in 2022. Quickly, Ed, we've got about 30 seconds. What are you expecting?
Look, there's going to be lots of excitement about particular technologies, improvements in battery technology and performance, but it all comes back to this central aim of Elon and Tesla, which is affordability. They've never been able to produce the $35,000 EV that they have promised. Even as recently as July in earnings, Elon said, we need to address this affordability issue. The battery pack makes up around 25 to 40% of the manufacturing cost of the EV. So that's where they're focused. How can they bring that cost down and make EVs more accessible to a bigger market?
Ed Ludlow, thank you so much for your reporting there. Coming up, we're going to be talking about the passing of Justice Ruth Bader Ginsburg and what it means for the Supreme Court. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Washington and the world still reeling after the death of Supreme Court Justice Ruth Bader Ginsburg. Ginsburg, who became a feminist icon in her later years, passed away Friday at the age of 87. President Trump said today he expects to announce his pick for the Supreme Court by week's end. Before Justice Ginsburg is even buried, Senate Minority Whip Dick Durbin is among the Democrats urging Republicans to wait until after the election to hold a confirmation vote on the next Supreme Court nominee to discuss. We're joined by Massachusetts Attorney General Maura Healey. Attorney General Healey, politics aside, Ruth Bader Ginsburg had a dramatic impact on all of our lives, especially the lives of women. What is your reaction to her passing and what this means for the Supreme Court?
Well, thank you, Emily. It's great to be with you. It's a huge loss. It's a huge loss for, I think, our country. It's certainly a huge loss for the court and, for all who work in our field. I think about all that she accomplished as a lawyer. I mean, we talk a lot about her, and she's known, RBG. She, as you say, became this icon through her role in the Supreme Court. But one thing I really admire, in addition to her work on the Supreme Court, was her skill as a lawyer, as a litigator. She herself was the subject of terrible discrimination when she was going to law school, or when she was rejected for clerkships simply because she was a woman, or rejected at law firms simply because she was a woman. And then the way she moved forward, Emily, to build systematically, step by step, the entire body of gender discrimination cases and law that we rely on today is really remarkable. So a remarkable life, a remarkable woman, a trailblazer, and a huge, huge loss for the country.
You know, obviously, this has set up what is going to be another fierce partisan battle. And what do you make of the moves that the president is making and Senate Majority Leader Mitch McConnell is making? The president saying he'll have someone chosen by Friday.
Yeah, I mean, it's the height of hypocrisy, right? This is Mitch McConnell, who held up Merrick Garland's nomination for a year. I mean, it is, it's laughable to see the statements coming from certain Senate Republicans saying that they are going to follow what Donald Trump wants to do and allow him to nominate somebody and have a confirmation process, because it's simply partisan for them. So it's a real disservice and dishonor to the integrity of the rule of law, and frankly, our system of government, where no matter your political party, no matter how charged the times may be, there were just certain things that really had to abide. And it is absolutely the case that the next president of the United States should have the opportunity to nominate the next justice to the Supreme Court. And the position that Donald Trump is taking is not surprising, but certainly disappointing, as are the statements by some in the Senate. I'm heartened to see others come forward, with the courage of principle and conviction, to say that they're not going to vote, and that's really important.
Should the president have a justice confirmed before he leaves office, how dramatically would that reshape American courts, and what impact would that have on all of the lives of American citizens?
I mean, we have major cases coming up right now that are to be heard by the next justice. For example, the constitutionality of the Affordable Care Act. And this is an issue, healthcare, Americans' access to healthcare, that is so, so important. And that court is going to decide whether or not the ACA stands. And that's just one of any number of cases that are so important, which is why it's so appropriate and important that the next president, whoever it is who's elected on November 3rd, then be the person responsible for nominating the next justice. It represents the will of the people. This is the way the system is supposed to work. And I think that, that what Mitch McConnell and Donald Trump are trying to do and advocate for is just really shameful.
Now, the president says he's planning to name a replacement as early as Friday. He also says that there are as many as 5 women under consideration. Judge Amy Coney Barrett seems to be a frontrunner. Are any of these potential candidates, in your view, suitable replacements or acceptable replacements?
I think, Emily, what really people need to keep their focus on, and again, I call upon Republicans all over the country to speak to basic principles that have abided for so long. It's about the process, and it's about the integrity of the process. And again, you look at the situation with Merrick Garland and just how wrong that was, and to have Mitch McConnell then move to quickly push through a nominee on a much, much shorter time frame is really terrible. And, I just call on people of goodwill to continue to follow the acts and the leadership of Elisa Murkowski or Susan Collins and just say, no, this is not right, and it is the next president who should nominate the next justice. So I'm not going to get into an analysis of whomever Trump has suggested or put forth. I think the important thing is the process here, because regardless of what party is in power, regardless of what time we are living in and through in our country, we have to make sure that we really stay faithful to certain principles, and the integrity of this is more important than ever.
Now, we cover technology on this program, which is now facing antitrust scrutiny, as you and I have discussed. It's an industry that affects all of us in so many ways. what changes for the technology industry, or could change, without Justice Ginsburg's voice on the court and with a more conservative voice on the court?
Well, yeah, I think it's an interesting question, and I guess we'll see. There will be a new court in a matter of time. I mean, that is a fact. The kind of cases they take up, the issues presented, we'll have to see how that goes. I do think, though, I personally, as an attorney general, think perhaps more about the role of the Justice Department. And, you know, Bill Barr has failed on so many fronts as U.S. Attorney General, and completely abdicated responsibility. And, you know, I think that also applies when it comes to his to the work of his antitrust division. Some good people working hard there, but nevertheless have had their work completely controlled by Bill Barr, who has an agenda that is solely his own and the president. So, you know, that's what I look at, is what's going to happen in the Justice Department, who's going to take over in charge of the antitrust division, and what kind of agenda will they be allowed to set. And I think it'll be a very different agenda in a Biden-Harris administration than in a Trump administration. And for the sake of the markets, I sure hope we see the Biden-Harris administration and the integrity of a Justice Department restored.
Now, there are major tech issues on the horizon. One of them, of course, is Oracle and TikTok. Of course, the evolution of U.S.-China relations is another. What are you hoping to be on the Biden-Harris agenda should Joe Biden actually win this election in November?
Well, I think to begin with, it's policy making, not by tweets. It's policy making and positions that are taken based on conversations with stakeholders, based on conversations with experts, and not on the latest and last comment by Sean Hannity. And unfortunately, I think for many businesses, you know, we've lived through a time with tremendous uncertainty where people are just waiting to see what it is that Donald Trump tweets next, and then having to sort of, you know, hew to that, be accountable to that.
It looks like we've lost Attorney General Maura Healey. There she is.
Oh,
we lost
sorry.
you for a moment, Attorney General. You can finish. Please finish your thought.
Okay. I was just going to say, businesses in this country deserve clarity. They deserve steadiness, and they deserve, you know, smart, fact-informed rulemaking, and not policy by tweets, day to day or hour to hour. And unfortunately, that's what we've seen and lived through as a country with Donald Trump.
All right. Well, Attorney General Healey, thank you so much for taking the time to join us. Glad to hear your voice on this very important and evolving issue on the show today. Thank you. Coming up, tech IPOs. We saw a rocket-fueled week for tech IPOs, but can they maintain the momentum? We'll talk to one venture capitalist with heavy investments in Snowflake and Unity next. This is Bloomberg. A huge debut for tech IPOs last week. 4 Silicon Valley companies going public, including Snowflake and Unity. The companies raising a lot of cash, but who are the real winners? The offerings ended up netting billions for venture capital firms like Sequoia, Iconic, and Altimeter, to name a few. Joining us now for more on the big week, Brad Gerstner, Altimeter Capital founder and CEO. Brad, you were an investor in Snowflake as well as Unity. What do these exits mean for you?
Emily, thanks for having me on. Well, there's significant moments in time in the life cycle of 2 really iconic businesses with iconic founders, but they certainly aren't overnight successes. Snowflake, we're 7 years into that journey with them. Unity's been on the journey for over a decade. So I thought they were moments to reflect on the incredible software companies they've built. But the truth is, I think the best road lies ahead for both of those companies.
Now, we interviewed the CEOs of all of the tech companies that went public last week, including Snowflake CEO Frank Slootman. Huge story in that the shares had a huge pop, over 100%, which also means they left a lot of money on the table. Unity had a big pop as well, just not quite as big as Snowflake's. Take a listen what Frank told me about the pricing and whether or not he felt there was a pricing issue. Take a listen.
We could have sold the entire offering at the number that we closed at. And obviously, there's such a thing as a demand curve. There's always investors that are, willing to, buy some number of shares at higher prices.
So, he's saying he didn't think that they could have sold the offering, the entire offering at the price they closed at, though if they could have, certainly that would not have been welcome news. But either way, is it at all upsetting that they could have made so much more?
Well, I really think you have to provide context into what happens here. As you know, we invest in both venture capital, but we're also public market investors. And public market investors, they don't just bid the highest price. They have to think about the price at which they can earn a future return. I also helped to put on the conference and spoke at the Direct List conference with Bill Gurley. And you really have the two sides of the same coin on this debate. I think what you heard from Frank is exactly right. You can't look at the last trade by the last retail investor and say that's the price at which the entire multi-billion-dollar offering could have been sold at. I think from our perspective, this is an important milestone, but the company will ultimately get the valuation that it deserves. Whether it gets ahead of itself on any particular day or falls a little behind, isn't that relevant to us. We were thrilled that the company was able to go public at $120 a share, which was a dramatic markup from just the price we did in a private round in January of this year. So if you're going to make the case that the public markets aren't very good at valuing companies, then I guess you would have to make the case that those private rounds that valued the company at $12 billion in January of this year were also mispriced.
100% though is a lot. It is quite an uplift. I mean, are there any lessons here that you think for the companies that are coming out of the gate later this year, whether it's Palantir or Airbnb or Asana?
Well, you see several of those companies that are going to be coming out using direct list and other mechanisms to come public. And so the good news is there's innovation going on in Silicon Valley. This is the right conversation to have. Bill Gurley really instigated in many ways us to have the conversation, but we can't paint with just a single brush. For some companies, the IPO will be the way to go with a traditional underwritten offering. Unity invoked a different way to try to achieve price discovery, a bidding model that was deployed by their underwriters that we participated in. You'll see direct lists, and some of them have been quite successful. Others have had more of a mediocre outcome. And certainly we know now that there is this third door that Bill talks about, right. The SPAC as a way to get to the public markets.
Well, I know you filed for a SPAC of your own. You're in a quiet period. You can't talk about that one specifically, but let's talk about SPACs in general. Is this a good trend? These companies aren't going through the traditional vetting process, which I know gives some pause.
Well, like every other financial innovation and vehicle, there will be good ones and there will be bad ones. And you're right, I can't specifically talk about it, except to say, living in the heart of Silicon Valley, I started my career as a securities lawyer in the mid-90s. And I will tell you that innovations that help founders, innovation that help companies get to the public markets, tap into those dollars easier, faster, less distraction with good ongoing partners. I think all those innovations are good. So I think all of this conversation, whether it's about direct lists, whether it's about the pricing of a traditional underwriting, or whether it's about SPACs, I think it's healthy for the ecosystem.
Now, you're also an investor in ByteDance, the Chinese parent company of TikTok. So curious what it's been like watching these twists and turns as an investor on the sideline, not knowing what's going to happen with a really important asset.
Well, I'll tell you, the last 180 days have been unsettling in many, many different ways, as you know, Emily. So just throw this one on top of a heap of them that 2020 has brought. But what I would say is we met Yiming in 2016, 2017. We invested in 2017. And it's just extraordinary what he's been able to build in that period of time. When we invested, he had a dream of becoming a global internet business. We thought that was a stretch. No Chinese company had built a global internet business. And yet, within a matter of 3 years, he built a fantastic global business. We're thrilled to be investors. And when you look at the business of ByteDance, remember, over 98% of the revenues have nothing to do with TikTok. They're the revenues of ByteDance, the company in China. We think that's going to be a fantastic investment on its own right. And then when you look at the deal that was put together, set aside the politics, set aside your own personal views on how it got put together. The outcome for the investors in ByteDance and the outcomes for the other stakeholders seem to me to be pretty good outcomes.
Now, you're also working with the board list on something called the Board Challenge to improve representation of Black directors across corporate America. How do you intend to hold companies accountable? How are you holding yourself accountable in terms of the diversity of your own LPs?
Well, thanks for bringing it up. This is perhaps, while last week was a really seminal week for Altimeter with Snowflake and Unity, I would say, we launched this now 2 or 3 weeks ago. The response has been incredible. And really, it's a very simple goal. We want to accelerate the diversity of all underrepresented groups on corporate boards, Black, Latino, women, that will, in fact, improve the performance of these companies, and it will improve the outcomes for our communities. I've been thrilled at the response from Zillow to Merck, from the New York Stock Exchange, all the way to Accolade Health. We have companies taking the pledge, and if they don't have a Black director, they've agreed to add a Black director within the next 12 months. And the way we're going to hold them accountable is we're going to continue to use our social feed, come on shows like this, and share the successes. This isn't about shaming companies. This is about shifting from a corporate America 1.0, where we checked boxes and then hid in the bushes, to a corporate America 2.0 that really uplifts and encourages people to realize the vast potential of tapping into these groups.
All right, good to hear about the important work that you are doing. Thanks for sharing it with us. Brad Gerstner of Altimeter, thank you so much for stopping by. Still ahead, once deemed a front-runner in autonomous cars, Uber now reevaluating its self-driving division. The faltering project, as well as California's gig worker bill, putting more pressure on CEO Dara Khosrowshahi. We will discuss next. This is Bloomberg. Uber was once a serious contender in the race to build self-driving cars and revolutionize global transportation with deep pockets and some of the best brains in robotics. But today, the effort is lagging far behind its rivals and has investors questioning the project. For more, I want to bring in Lizette Chapman, who covers Uber for Bloomberg. So where do Uber's self-driving efforts stand, and what do investors want the company to do?
Hey, Emily. Uber's self-driving efforts have really lagged behind the competition, since they spun out this subsidiary called HEG last year. It's not making a drain on its corporate balance sheet anymore because it's a standalone group. But that still doesn't really address the existential question whether Uber should be in the business of making cars at all, or whether it should partner, much like, Lyft has done. So, they've, at the situation now, they sold about 14% last year. They are going to run out of money for this division at the end of next year. So we have investors, SoftBank and Benchmark, now pressuring Dara to figure out, what the funding plan is going to look like, even more importantly, what the strategy is going to look like.
So stepping back a few paces, then, how is Uber actually performing?
Right. Well, what we know is that they've focused a lot on replacing its core technology, so it wouldn't have to license it from CMU anymore, Carnegie Mellon University. That has been what they've been doing kind of behind the scenes for the past year, as they've kind of gone dark and quiet. We also know through our reporting that a lot of their partnerships are either stalled or kind of in a purgatory, like their arrangement with Daimler is paused as part of Daimler's larger pause on passenger cars. And another deal that they had with Aptiv is on hold. We also know that Dara has privately encouraged ATG CEO Eric Mayhofer to go and explore open sourcing the technology, which would be a radical turnaround, and that meeting got really contentious, and that ATG's lead has dismissed it as being too complicated and opening a can of worms. But we also have investors like Benchmark's Bill Gurley saying that this is the route to go and that they can make a lot more progress much faster and maybe even become a leader in the self-driving effort if they do that, so they can better compete against the leaders, which are Google's Waymo, GM's Cruise, and Amazon's Zoox, have all made great gains. Like, for example, Waymo, they've logged hundreds of thousands of miles in more than 24 cities, and Uber, it operates less than 10 cars in just 2.
Okay. We'll have to leave it there, Lizette. Thank you so much for joining us, Lizette Chapman. Bill Gurley's ears are probably burning. 2 mentions today on the show. Thank you all for joining us. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Bloomberg Daybreak Australia is next.